Hey everybody, welcome to Journey to a Million. This is the first video that I'm putting out, and I'll give you sort of a bit of an overview later on in terms of what the channel is all about, but I wanted to get this out first. So we'll start up with a bit of an update on the S&P 500. So obviously we've been in a downtrend since the beginning of the year. We have a megaphone pattern here that's well established, and then we have this resistance level that's also a key resistance level as well. And so recently we've bounced off this level right here. I had some puts at this level, and then here is where we ended today. So let's zoom into that a little bit. And what's interesting here is if we draw a rectangle, we have this big candle. And then we've had a few days of an upward trend, but still sort of within the overall body or the overall length of that candle from a high and low perspective. So this is known as a falling three method. Typically how these resolve themselves is on the fifth day, you see a large candle to break this trend, and it reverses. So it's a possibility that this is going to develop. So this is one thing that's interesting that I've been looking at from an S&P 500 perspective, but this is not the only chart that we can see this on. I'll go to the other charts as well. We also notice a bit of a declining volume here as well. So this has been going up for some time now, but on lower volume. So that's also a bearish sign that things could reverse, and tomorrow being a pretty important day. The theory that I have is that it could reverse tomorrow, and we can see a further downward movement in price for the S&P. Let's go to the other chart. So here we have the NASDAQ. It's also been in a similar pattern as the S&P 500. It's been in this megaphone pattern in the same time frame. But the tech rally has been far stronger than the S&P 500. It's actually peaked above this resistance line. Could be a false breakout because it's since broken down below it again. But today, as a close of day, it's just above this resistance line. So not very well defined in terms of falling three method pattern here. It could very well have an update tomorrow after the Powell speech, but it has broken momentum here. So we'll have to see how that plays out, but very similar in terms of pattern as the S&P 500. So S&P 500 probably a little bit less bullish. NASDAQ tech is more bullish with a possible breakout back above levels of resistance. So it's at a pretty pivotal point here. But if we were to look at just the volatility of the VIX, what we have here has been just a wedge that's been forming, a symmetrical wedge. And it hasn't broken out past these levels of resistance, and it's been bouncing right off the levels of support here, except for more recently, it broke below and then it broke back up above that level. So, and what's interesting today is it closed right on support right here. So don't know if the VIX will turn back over. The momentum looks to have teetered out a little bit, but it is at support. It is quite low in terms of where the VIX is and relative to sort of where we've been. There's a lot of thought out there that the market's a little bit more dovish than warranted. Inflation is still 8.5%. It's really high. It's come down a little bit, but there's no reason why the Fed is going to take its foot off the gas at this point. So with all the uncertainty, there's probably more volatility ahead of us than there is behind us. So don't know if this sort of curls back up like it did over here, where it sort of peaked and then it kind of sort of regained momentum over here later on. So that could very well happen. Right now we are at support, so there's probably a little bit more volatility ahead given sort of where we are. Okay, so let's talk about positioning. So these are the cues. For all intents and purposes, they pretty much track along with the Nasdaq. So you can see it's a very similar pattern as the Nasdaq, and it's broken above its resistance level here as well. During the day, I took a position, puts probably at this point about 1,000, committed to puts against the Qs, some of which are for mid-September, some are for the end of next week actually. So about 1,000 in total. It's a bit more of a risk here because it did by the end of the day break above this level. During the day, it was tracking sort of within the range of this bearish candle, but now it's above that, so it's actually closed above this resistance line. So it's a bit more risk now at this point. I was thinking that it would actually close at resistance, but it's actually broken above that as well. So the momentum is also curling up, but in the correction, things don't go straight down, right? Things will sort of go down and then have a bit of a counter trend rally, and then maybe it moves further down from there. So don't know. It does sort of invalidate that that pattern that I was talking about before with the falling three-star method. But those patterns are never perfect. Sometimes it's 3 days, sometimes it's 4 days, sometimes it takes the entire length of the candle, not just the body. But it is a little bit more worrying here, so we'll see how things play out tomorrow. But that's how we're positioned with the Qs for the end of the day today. Okay, so this is Apple's chart, and similar to the Nasdaq, it's been in a megaphone pattern that's been declining since the beginning of the year. But more recently, Apple's has had a tremendous run-up. It's barely had any days of significant pullback outside of maybe this day here, and it's just gapped up. So it did respect this resistance level here, and I had taken some puts at this point, and then I added some more today at this level. So let's just zoom in a little bit here. So there's this big bearish candle, and as mentioned before, this is resembling a falling three methods pattern. So after this big bear candle over here, there's been 3 days of sort of smaller candles of increases, and today it's closed just above, I think. But if we were to incorporate the wick over here, we can probably say that it's closed within that candle. Although this sort of is a bit below. It's not perfect. Sometimes it could be 4 days. Sometimes it's a bit above. Sometimes it's a bit below. But for our intensive purposes, it's pretty much engulfing these 3 days. This particular candle. So I do think that tomorrow we will see a bit of a downdraft after Powell speaks. The other thing to notice as well, similar to the other charts, we've been in declining volume here, so it's not a particularly strong rally. It is not maybe as widely participated as maybe most people think. It is declining volume, so it's also lost momentum here. It's crossed over on the MACD, although there could be a bit of a reversal here in terms of momentum. So we'll see how tomorrow plays out. It is going to be dependent on what Powell says, but as of end of day today, I took position here as well. So we have about 2,000 committed to this particular trade on the puts for Apple, and we'll see how it comes. We'll see how it turns out. But similar to the other charts, it was way overbought, and now it's kind of pulled back, and it's not out of the ordinary to see a bit of a bounce before things head back down. Unless there's really bad news, things won't have a sort of a waterfall sell-off all the way down. Things will sort of stair-step down, and I think that's what we're seeing now. And I think Apple does have a little bit more room to correct. If we were to look at a fib retracement from the beginning of this move, you see Apple hasn't even pulled back to the 23.6 level. So it probably has a little bit more ways to go in terms of a correction. It wouldn't be surprising to sort of see this initial down trend and then a counter rally, and then it moves further down. So that would not be out of the ordinary. But we'll have to see sort of how tomorrow plays out. But as of end of day today, that's how we're positioned.